Welcome back to Squawk on the Street. Stocks rebounding here a bit. Dow's up 150 after a rough couple of days into Q2. Our next guest believes the S&P is still vulnerable to a bit of a pullback. Let's bring in Piper Sandler Chief Investment Strategist Michael Kantrowitz. Michael, great to have you back. Good morning.
Hey, good morning.
I think year-end looking at 5250. I wonder what it would take, though, for you to start thinking about some upward revisions.
Anything that brings down bond yields, period. And I think there are data that could continue to do that. You know, look at what claims did today, and I am biased to the upside. Look at what claims did today to bonds and stocks. Just a small 20,000 increase in claims. We'll see what happens tomorrow with the unemployment rate, but as we see it, the labor data is going to continue to grind at a softening or continue to soften and provide the Fed and investors continue to believe that the Fed will cut rates 2-3 times this year, and I think markets will go up on that.
Right. And nothing from Powell yesterday to dissuade anyone of that notion?
Doesn't seem like it. You know, his views are reaction function seems very asymmetric, and he seems pretty bent on getting those 3 rate cuts in. You know, the risk to that, of course, is if commodities and the economy sharply reaccelerate, which, you know, we've seen a little bit of that year to date. But I don't think it's a big enough problem to offset some of the more disinflationary forces we're seeing on the services side of the economy.
Michael, it's interesting because, you know, I think there's typically a pretty narrow window when softer economic numbers can benefit markets. It's when you're kind of trying to fine tune the timing of maybe a policy easing move right now. I wonder how you read things like maybe there's some fatigue on the consumer side of the economy in pockets. Meanwhile, you see people getting excited about the ISM manufacturing numbers go back into positive territory after a couple of years when we decided, well, that's not really telling us what the underlying economy is doing. Are we just seeing a shift to the production side of the economy? How do you read this?
Well, I think the psychology of investors has shifted for the third time in the last 60 years. We've seen interest rates and stock prices be negatively correlated now for the last couple of years. We hadn't had that backdrop really since the late 1990s, and that was a backdrop we had throughout the 70s and 80s as well. And so I think, the irony here is typically PMIs going back above 50, we'd be raging bulls recommending small cap risk on strategies. But here's an interesting stat. The prices paid index, which now everyone focuses on, they never did 2 years ago. The correlation between the prices paid index and the ISM index is about 90%. So you can't really expect to see higher PMIs and better growth without seeing a side of inflation and therefore higher bond yields. So it kind of takes some of the momentum and the excitement out of the equity market, in my opinion. If we continue to see higher PMIs, higher oil, higher interest rates, you're not going to see the typical playbook play out.
Looking through the list of stocks that are newly ranked as attractive in your macro select model, we can go through a few of them here. There's Schwab, there's Valero, there's some others. But what strings run through them? What do they have in common?
So we've been on the high quality bandwagon for nearly 2 years now, and we define quality as companies with high levels of cash flow profitability, good realized earnings growth, companies that are seeing earnings revisions that are beating their peers, and companies with high free cash flow yield. So we call it QARP, quality at a reasonable price, a little bit of a play on GARP. So it's that collection of fundamental attributes that has been the core of our long model. And the first quarter, we had one of the best performances of our model since we've been running it in 2018. So that's the commonality. It's not about picking sectors. It's really about picking stocks within sectors that have those attributes.
All right. I gave viewers a quick peek at some of those names, Michael. Interesting, and as you point out, a lot will depend on the data to come tomorrow, of course, among the most important. Thanks so much. Good to see you. Michael Kantrowitz.